and welcome to another Smaulgld live stream. Today, is July 27th, 2018. It is Friday, and today's episode is called Why the Winklevoss Twins Bitcoin ETF Went Down in Flames Again. And before we get into the topic of the day, let's just quickly cover what happened during the day. The U.S. released its GDP numbers, and they were 4.1%, a very high result for the United States. And of course, Trump was out taking credit for it and predicting even higher growth in the future. Gold and silver reacted pretty much not to the news. Gold and silver are pretty much unchanged so far. The market hasn't closed yet. It will close for the week in another half an hour or so. We're recording this at 3:30 on July 27th, 2018. So gold right now is at 1222, which is pretty much where it started the day at 1224. It had dipped down to about 1218 and rose somewhat after the announcement of the GDP numbers, which was strange because you would think higher GDP numbers might make the Fed more likely to continue on its rate hike path. Silver did the same thing. Silver opened at 1540, went down a bit, but now silver is trading around 1544. It had reached a high of 1551. All right, now I'm doing this earlier today. Normally we do the live streams at 8 p.m. Eastern Standard Time. Tonight I have an interview with the Wealth Watchman that I'm going to record at that time. So also we've had Europeans request that I do the live stream a little earlier in the day. I do have some people in Europe that are on the live stream well after midnight, and they've requested we do this earlier. If you do miss the live stream, you can always catch it, obviously, on the recording that gets uploaded afterwards. Now, before we get into today's topic, which is why the Winklevoss Twins Bitcoin ETF went down in flames, just another word about why you should buy and hoard mugs. We've added the 13th reason to buy and hoard mugs. Here we go. 10 reasons why you should buy a Smaulgld mug. Reasons to buy and hoard mugs. Number 1. Mugs have been used for drinking for more than 5,000 years. Number 2. They are finding more uses for mugs every day. Number 3. We could not live our lives without mugs. Number 4. The Russians and Chinese are buying mugs hand over fist. Number 5. Mugs are made in China. Number 6. Mugs are hard assets. Number 7. Mugs are real wealth. Number 8. Mugs cannot go to zero. Number 9. Mugs are portable. Number 10. Mugs are drinking vessels, period. Wait, there is more. You can mix Mountain House in a mug. You can carry your barter silver in a mug. You can do many things with mugs that you cannot do with fiat currencies. Measure your wealth in mugs. They have mugs at the offices of JP Morgan and central banks. That is all you need to know. When the excrement hits the fan, you'll want to have your Smaulgld mug close by. Buy your Smaulgld mugs today. Reasons to buy and hoard mugs. Number 11. You can stack mugs. As you can see here, mugs are stackable. Add to your mug stack today. Buy a Smaulgld mug. Reasons to buy and hoard mugs. Number 12. You can put coffee in a mug. As you can see here, someone very clever has done so. Buy a Smaulgld mug today. Reasons to buy and hoard mugs. Number 13. You can put cognac in a mug. As you can see here, someone is thinking of putting cognac in a mug. Buy a Smaulgld mug today. Alright, we're now up to 13 reasons why you should buy and hoard Smaulgld mugs. We will have number 14 tomorrow at 8 o'clock. If you tune in at 8 o'clock Eastern Standard Time, you will hear a live stream, but you'll also get number 14, reasoned why to buy and hoard mugs. Alright, now we're going to talk about this Bitcoin ETF, why the Winklevoss Twins Bitcoin ETF went down in flames again. Now, when I say again, this happened once before where they tried to get a Bitcoin ETF up and running, and it was shut down. And I'm going to take you back to March of 2017. I was having an email conversation from Sean at SGT Report, and we were both concerned, wondering that if an ETF came out, whether it would be used to manipulate the price of the Bitcoin. And my concern was that, of course, but also that there's no limit to the amount that the trust can buy under the terms of the trust. And at the time, the buying and selling of Bitcoin, this is ancient history, but the majority was happening 90-95% on Chinese exchanges. This is before all the other exchanges got up to speed and before China actually banned and shut down its exchanges. So I was pretty sure they weren't going to approve the ETF anyway, but I was concerned about it because obviously there's a potential for manipulation. I was also concerned, and still am concerned, that since there's no limit to how much you can put in the trust, that the ETF could gobble up such substantial amounts of Bitcoin as to almost destroy the integrity of the transaction platform, because if it's all huddled into, not huddled, but huddled into an ETF and it's locked in there, then it doesn't really get used as a transactional currency. That was my main concern, along with the manipulation process. And Sean and I were agreeing that it's probably not a good thing for an ETF. I think he said it does nothing good for the long-term health, basically because of the criminality on Wall Street. And I was saying that if the SEC wants to protect investors, they won't declare the registration statement effective. And buying Bitcoin via an ETF is obviously more risky, just the same as buying anything in an ETF. You don't have actual possession, or you don't have the private keys of your Bitcoin. And I thought it would make the market more risky, like injecting a virus into a system that can devour it. And I was thinking at the time that a Bitcoin ETF wouldn't be validation of Bitcoin, but rather a line of attack. And there was a lot of enthusiasm at the time, back in February, March of 2017, because this was going to be the great validator. This was going to be the herd is coming. Now institutional investors can buy Bitcoin via this ETF. And then I think Sean brought in Bix Weir, and his view was he was on that enthusiasm, but basically, yes, you're not getting Bitcoin off the blockchain. It's a derivative, but it'll even divert money away from real Bitcoin. But his view at the time, I don't think he holds this anymore, was that it was going to increase the exposure and create, this fever pitch that would expose more people to Bitcoin. And what happened was the SEC they rejected the Bitcoin ETF. And at the time, back in February of 2017, the price was around $998. It had risen almost up to $1,300 on the hype and expectation that they might do this ETF, and the ETF might get approved, and then it was going to be off to the races. Well, when the ETF got not approved, and I'm going to go through the reasons why it didn't get approved, and then we're going to go through the reasons why the most recent one didn't get approved. The Bitcoin price did fall back from about $1,300 down to around $1,100, but then it shrugged that off, and by June it was $2,500. By August of 2017, it was $4,000, and as you all know, by the end of the year, without any type of ETF being approved, the Bitcoin price rose all the way to $20,000. Now, a lot of that gain towards the end of the year was based on the expectation that there was going to be a derivative Bitcoin introduced by the CME group. So that created a lot of buzz. But after it was approved, that's when the Bitcoin price fell. So we saw when the ETF back in March of 2017, the Winklevoss twins ETF, was shot down. The price only went down for a day or two, and then it went off to the races. And then when the derivatives platform, Bitcoin derivatives trading, was going to be introduced, it rose. But once it was introduced, it fell down. Now, ETFs and derivatives both can be used to corral the price, control, and some would say manipulate the price of Bitcoin. So I was not a fan of the Bitcoin ETF, and having not had it approved in March of 2017 did not stop interest in Bitcoin as we saw the price rose. But why did they reject the Bitcoin ETF back in 2017? It's instructive because they have similar reasons now. So back in 2017 in March, their main concern was, and they like to use the words that the Winklevoss twins put in the registration statement to get it approved against them. They had mentioned that one of the risks was that approximately 95% of the global trade volume in Bitcoin occurs on these unregulated exchanges in China. That was true at the time. And then they said if China were to regulate Bitcoin traded on Chinese Bitcoin exchanges in a manner that materially restricted liquidity in trading, it could have a significant impact on the price of Bitcoin globally. Now, China indeed finally did do that. They shut down the exchanges, but it didn't have a significant impact on the price of Bitcoin globally. The trading just went elsewhere and the price continued to rise. But they were correct to point that out in the registration statement that was a risk. Remember, a risk is something you say it might happen and you don't even know if it will happen, and then if it does happen, you're not even sure what might result from the fact that that happened. So they were right to point out that, look, a lot of trading's happening in China. Most of it, if China's going to clamp down on this, it could have an impact on the price. Then they said such regulatory actions or restrictions could adversely affect an investment in the shares, meaning the underlying Bitcoin, and could result in a termination or liquidation of the trust at a time that is disadvantageous to shareholders. The SEC cottoned onto that, and they were concerned that there is no what they call surveillance sharing agreement with significant markets for the underlying commodity, meaning the Bitcoin, and there's no real regulation of these exchanges. So the SEC's point was, look, this is the Wild West. You may have a regulated ETF, but the underlying asset, the Bitcoin, is not regulated whatsoever. We don't know what's going on in those markets, and they could be subject to manipulation. And so the commission, the SEC at the time, said based on the record being what the Winklevoss twins put in the registration statement about what's going on in China at the time, was that this was going to be a problem, and they couldn't go ahead and approve a Bitcoin ETF. And they said, therefore, as the exchange is not entered into and will not currently be able to enter into the type of surveillance sharing agreement that has been in place with respect to all previously approved commodity trust ETFs, we cannot approve this. It makes sense. If the idea that the SEC approves an ETF, that the understanding is that the SEC is acting as somewhat of a watchdog. Well, if they can't act as a watchdog, what's the point of them saying they approve of the ETF? So that was one of the reasons. Also at the time, the Winklevoss twins were concerned that Bitcoin itself might be deemed a security. And they were mentioning all the back and forth at the time that the SEC might consider it security, might not consider it security. I think that's pretty much been settled. Bitcoin is not a security, but at the time that was something that was a concern too. And I think the SEC realized they hadn't ruled on it, so they weren't really keen to approve something where they weren't quite sure what Bitcoin was and they weren't comfortable the way it was trading, so they rejected it. Now, these aren't the reasons I was against it. I was against it because I didn't want to see a lot of Bitcoin tied up into an ETF. All right, now, the Winklevoss twins didn't give up. That was March 2017. They bring back their proposal, and they're trying to get the SEC to approve it again. Now, the rejection that they face this time is different. Obviously, they're not going to say, well, we can't approve this because all that trading in China on unregulated exchanges. Well, that's not true. There is no trading in China. There may be some trading in China, but there's not trading officially, legally, on all the large Chinese exchanges that have since shut down or moved offshore. So that wasn't the reason, but it was a similar reason. What they were still focused on was they do not have these surveillance sharing agreements So the problem for the SEC with approving of the ETF is there's trading happening all over the place. And they really don't know whether there's manipulation or not manipulation and how they really can't give any oversight to it. And since a lot of the trading happens overseas, it's not like they can say, well, if it was all happening on Coinbase and Coinbase was registered with the SEC as an alternative trading platform, I think in that case, they would feel perfectly comfortable allowing an ETF. But because Bitcoin is traded globally on so many exchanges, and eventually, and they didn't mention this, it'll eventually be traded off exchange, where the SEC will have no way of determining what's going on. But right now, they're concerned that the trading is happening on places where they have no way of looking into these, what they call surveillance sharing agreements. And the Winklevoss twins were saying, yeah, but that's not the only way you can figure out what's going on. You've approved other ones, perhaps, that don't have these robust surveillance sharing agreements. But they weren't convinced. The SEC was basically saying, look, there is no agreement, surveillance sharing agreement, with a regulated market of significant size related to Bitcoin. This is the key. They're talking about significant size. Now what they're trying to say, the SEC, is basically the trading in Bitcoin is not ready yet. Meaning it's not large enough yet, and therefore it's probably more subject to manipulation. And unless they can get these types of agreements in place, and they don't want to be tracking 15, 20, 30 different exchanges globally, they really can't tell what's going on. Now, the Winklevoss twins, they try to use that to their advantage. They say, well, the trading is geographically diverse, and because it's continually trading 24/7, that makes it difficult, and they said, and prohibitively costly to manipulate the price of Bitcoin. And therefore, Bitcoin market is generally less susceptible to manipulation than the equity, fixed income, commodities, futures markets, because novel systems intrinsic to this new market provide unique additional protections that are unavailable in traditional commodity markets. It's a clever argument, but I don't think if you wanted to manipulate, you'd have to manipulate on all the different exchanges, because certain of the exchanges lead and the other exchanges follow. So you don't have to manipulate on 27 exchanges, and just the fact that it's open 24/7 doesn't mean anything. It just means you can find periods of time when trading is light and you can manipulate on that exchange. And then, but as you can tell, I don't think that's a good argument, that because the markets are geographically diverse, they're less subject to manipulation, and therefore the SEC should feel comfortable that manipulation is not going on. Now, the Winklevoss twins also put this in their registration statement, because they have to put the risks in. And of course, when they put the risks in, they're giving an opening for the SEC to reject it. They said profit-motivated hackers can launch attacks to manipulate Bitcoin and achieve their intended effect of artificially raising or lowering prices. The trust, which is the Winklevoss registration statement ETF, also recognizes the risk of malicious actor obtaining control of the processing power dedicated to mining on the Bitcoin network and exerting authority over the Bitcoin network. He's talking about, I guess, a 50% attack. Such control can be used to manipulate Bitcoin pricing, and there may be non-material public information relating to hacking plans. Well, that's all the SEC needs to know. Like, thanks for telling us that. They say, based on the analysis above, we're not going to allow this. There is insufficient basis in the record before it to decide that the Bitcoin spot markets are inherently resistant to manipulation. They're basically saying that these markets are very subject to manipulation and we're not going to prove it. Now, that's a little disingenuous because, as we know, all the markets are subject to manipulation. But I guess what the SEC is saying, at least we can see it, we can know about it, someone could conceivably bring an action. Here you really can't. If you're doing this on Huobi or some other exchange, Bitstamp, they really can't do anything about it. They don't know what's going on. They have no real jurisdiction over it. So they're saying that this is subject to manipulation. But this is what I found interesting. The last point, they're saying it's still too early. And listen to this. The Commission notes that regulated Bitcoin-related markets are in the early stage of development. Now, this is my point about what the SEC, what the CME Group, what Silicon Valley, what Wall Street lawyers, what Wall Street bankers and accountants want. They want a mature, regulated market so they can make a fortune off of it. They don't want surprises. They don't want some rinky-dink exchange somehow screwing up and throwing them a monkey wrench because something happens there, a hack, or they want to corral it. And I think they're looking towards trying to get Coinbase and Poloniex. Remember, Goldman Sachs, through an investment vehicle, has a has an investment in Poloniex, and Andreessen Horowitz has an investment in Coinbase. So I think they're going to try to get those to be the dominant platforms and get pricing off of them, and that's what the CME Group does. And then I think they'll be comfortable with approving an ETF. And then they said, over time, regulated Bitcoin-related markets can continue to grow in development. So they're definitely saying we're going to approve one of these at some point, once we have the confidence that the markets aren't being manipulated in a way that we don't want them manipulated, or that we can't figure out how it's happening, and we can have these agreements. And clearly, if they approve Coinbase, Poloniex as alternative trading platforms, they will have agreements in place so they can have oversight over these markets. But they don't have that yet. Over time, regulated Bitcoin-related markets may continue to grow in development. For example, existing or newly created Bitcoin futures markets may achieve significant size. So now they're all in favor of the CME Group's Bitcoin futures, but there's just not enough trading there. And an ETF listing exchange may be able to demonstrate in a proposed rule change that it will be able to address the risk of fraud and manipulation by sharing surveillance information with a regulated market of significant size related to Bitcoin. So they're saying, once we have these larger markets, more regulated markets, derivative markets, and we realize that we can get the fraud and manipulation risk out through these surveillance sharing agreements, and the market is bigger, then go ahead and have at it. We're just not there yet, is what they're saying. Then it says, should these circumstances develop or conditions otherwise change in a manner that affects Exchange Act analysis, the Commission would then have the opportunity to consider whether a Bitcoin ETF would be consistent with the requirements of the Exchange Act. So they shot it down, but they shot it down on the basis that they can't regulate it properly and it's too small and there's fraud. Those aren't the reasons why I don't want them to put an ETF in place, because I think it'll just pull vast amounts of Bitcoin out of the system and locked into cold storage into an ETF. And who even knows how much is in there? It's just, I don't think it's a good idea. I think it's not counterintuitive, but it's contra the concept that Bitcoin is a currency with a limited issuance, and you don't want to lock up half of it or more, and then therefore it can't be used. Now, it probably would have a positive impact on the price, but who knows? I mean, how they would do derivatives using ETFs. Then some people, you'd have to track the blockchain flows of Bitcoin flowing in and out of the ETF. I don't think that that's why they created Bitcoin. But some may disagree, and you can put your comments either below when this is up, or you can put them now in the, we're going to take comments on the sidebar. But the final point they made, and this should give hope to people who want the ETF, is not just we're not there yet, it's too small, it's not regulated enough, there may be fraud that we don't know about, we don't have these surveillance sharing agreements. They said, although the Commission is disapproving this ETF, the Commission emphasizes, they didn't have to do this, that its disapproval does not rest on an evaluation of whether Bitcoin or blockchain technology more generally has utility or value as an innovation or investment. Now, first of all, they didn't have to say that, because the SEC, as a general practice, claims that they do not ever say that they're passing on the validity of any particular investment. That's not their job. Their job is to make sure that if somebody is going to bring something to market, that it's properly disclosed, there's no omissions or material misstatements. But in this case, they want to make it very clear that they're not saying we're against Bitcoin or blockchain, and we're not saying it doesn't have value. We're just saying we can't do this ETF. And this ties into, those of you who've heard my podcast before, my view is in the middle. It's not in the Bitcoin is going to take over the world, it's going to crush central banking. That's one side. The other side has been the regulators and the governments are going to slam down Bitcoin, shut it down and ban it and arrest everybody. My view has been that there's so much money to be made in Bitcoin by bankers, lawyers, accountants, by regulators having jobs regulating, getting registration fees, that they're going to want to do that. They're not going to want to ban it. And they're also realizing that if there's a potential that it can get to the point where there's an alternative system out there, they're far better off trying to co-opt it than they are trying to ban it and shut it down, because then that just costs them money. They don't make any money. If they can try to get, even if they only get 30, 40, 50, 60% of trading eventually in 10 years on regulated exchange, and if people are doing stuff off-chain, lightning networks, peer-to-peer exchanges, and they can't control that, they can still make a fortune off of the centralized exchanges, and also they can do derivatives off of those. And then the government can still not just have massive regulatory presence, but they can also have their criminal enforcement division simultaneously also going after what they consider bad actors, money launderers, and tax evaders, and using it for other illicit means. So I think that's where we're headed. This rejection of the ETF doesn't change my view on what the regulators' view is on all this. They basically said it's too early. They didn't say it's not good, we don't want it, it's fraudulent. They're saying we want it, but we want it to be bigger and more regulated, and when it is, bring it on back. All right, well, that about does it. Let's see if we've got some let's see, we've got Gus the Broken. See, I did this one for you, Gus, and now you don't have to wait up to 2 o'clock in the morning in the Netherlands. Hi, Money Man. KZ Gixer 1000. SEC is angry because they can't have full control of the Bitcoin market manipulation. Well, it does have something to do with either. I don't think the SEC itself is the one that does the manipulation. SEC is the one that either doesn't enforce laws or rules, or does the enforcement of laws and rules. But they don't do. The SEC doesn't have people that do any market manipulation. They're there to be the regulatory body. So they don't get involved in buying or selling securities, manipulating markets. They're there as a regulatory agency. Any manipulation that happens, it's their job to either find it and shut it down, or say it's not an issue. And you can argue whether they do their job well or not, because we have examples where I think the Madoff, apparently people had gone to the SEC and they said nothing to see here. But then there's also cases where the SEC brings enforcement actions and they do track down market manipulation. Gus the Broken, San Francisco, Scott McKinsey. That's, are you going to San Francisco? Be sure to wear flowers in your hair. I guess you you change it to what's going on. Not much love in there at the moment. Yeah, well, take a visit there. I was there recently. Were the hippies right? I don't know. AUAG999. That is Silver and Gold 999. CME Group, CFTC, DTCC, SEC. It's a mess. Yeah, I mean, you have, and that's why I think they're not going to ban or outlaw anything, because all those groups that you mentioned, there's work and money to be made through regulation. The CME Group has already proven they're making money running a Bitcoin derivative trading platform. CFTC, commodities, DTCC, keeping track of this. You know, there are no certificates for Bitcoin, but once you get into buying ETF shares and then that's work for them. You remember, the whole Bitcoin ecosystem, while it could be totally outside and totally for the people away from the central banks, they don't want that. If they can corral some of it into the system, it just makes the system bigger and more profitable. More cryptocurrencies, more derivatives off the cryptocurrencies, more cryptocurrency ETFs. Then you got the whole ICO crowd. instead of doing IPOs, do you think that the regulators and the Silicon Valley money people and the Wall Street bankers and lawyers and accountants are happy that people are doing ICOs, writing up 6 pages on a white paper, shipping it off to a YouTube pumper, and dragging in hundreds of millions of dollars? No, they want that. What they want to do, I think the regulators want to do, and there's a site. The SEC has a web page. It's sec.gov/ I think it's just ICO, and it talks about how they want people to register their ICOs with them. So there's my argument that they'll go after the bad actors because they can have an enforcement division to go after them, but they'll also have a division that will welcome to bring the ICO through the same process that they bring the IPO through, which means you got a banker, you got a lawyer, writes up the registration statement, files it with the SEC. The SEC charges a few $100,000 to register your ICO. The lawyers charge $800,000 to draft it, and then the bankers go and pump it on Wall Street. You basically create and you securitize. You make Bitcoin and cryptocurrencies fit into the system, even though that's not how they were designed to be. All right. Let's see. Okay, Madness Bro. When I look at the whole scale, it's sort of disturbing, says Gus DeBroken. Tell me, who is ruling the monetary system, Christine Lagarde? You're asking questions and I am unable to answer, Gus DeBroken. AUAG999. They are not happy about Airbnb, Uber, Bitcoin, gold, silver because it's in the hands of the people and not big government. That's true, but think about Airbnb and Uber. They did manage to corral that somewhat and extract a lot of money out of it by Silicon Valley's invested in those companies. And they do want to bring them public. And gold and silver have always been outside the system, but they managed to corral that with the futures and commodities exchange by having derivatives, by having gold ETFs, silver ETFs. So they're only outside the system to the extent that people have the Bitcoin, have the gold, have the silver, and that these platforms like Airbnb and Uber are not financialized. But they've managed to get their hands into all of these things because there's money in there. That's why they're never going to ban stuff that's really big. They'd rather try to grab as much of it as they can. And what they can't grab, then they'll go after criminally. So I just don't get the argument that they're just going to go around and ban everything. They don't make any money once they ban or criminalize possession of gold, silver, anything. They just, there's a cost of compliance running around chasing people down when they could be making money off of it. And I think the lobbying of the Bitcoin crowd, the crypto crowd, a lot of them are pretty, they got a lot of money and they're probably already buying influence. I saw the Winklevoss twins got their bit license from New York and they donated to not Mario Cuomo, but Andrew Cuomo's gubernatorial campaign. You see examples of this, people taking Bitcoin donations. And you hear a lot, you know, if you listen to these esoteric hearings, which I've done in Congress, they're not out there bashing, but they're talking about innovation. They're talking about ways of raising capital. They're all for it. They just want to regulate it. You don't hear hardly anyone saying, oh, we just got to shut this down. And I think that's the mistake. People are thinking it's either going to get shut down or it's going to be this entirely separate ecosystem that's going to crush central banking. I think the ecosystem will exist off to the side always. There will always be people who will use it either for good, totally legal, but just not dealing with the regulatory part of it, or using it illegally. But there'll be a significant portion, already is, that will be in the system and regulated, and that's where they'll extract their fees. All right, let's see. Joshua, it's a criminal cartel, the SEC, the pit bulls, they just want to make sure they get their cut. Well, the SEC, I would imagine the SEC makes money because they charge a registration fee. It's a certain percentage of the securities issued. They charge a certain percentage of the ICO issued. And that'd be one area of government like that actually brings in cash. Here in Denmark, I didn't know AUAG999 was in Denmark. The government also get data from Airbnb so they can tax people. Yes. See, these ideas that are so great and so outside the system, if there's money to be made, then they'll try to bring them as much as they can into the system. Joshua Roberts are very happy about cryptos. Sure, it dovetails. I wrote about this 3 years ago with the cashless vector. Bitcoin has been cartel hijacked since the 13 handle, in my opinion. Could be. I mean, the thing that's attractive to them about Bitcoin is because it's limited and because they love this digital stuff. The problem with trying to make money off of something like a housing bubble is you're stuck with the collateral. You're stuck with the social consequences of people losing their houses. You're stuck with trying to sell the house. You're stuck with people raiding the houses, pulling the stuff out. When you run a housing bubble up and then it collapses, it's a big, big problem. Stock bubbles, they're better. They're less messy. There's only so much you can do to convince people that a company like Tesla that doesn't make any money and who has a CEO who sometimes appears to be a bit off kilter, that they should continue to bid that up. The advantage of cryptos is there's no rhyme or reason. You can say it's worth $13, but you can get the bankers and the media behind it and say it's worth $50,000. No, it's worth $100,000, $2 million, $5 million. What's the difference? That's the best thing from their perspective, is that there's no mess in it. There's no collateral. There's no people that are pissed off that they lost their homes. There's no saying, we can't justify a company that makes no money having an $18 billion, $48 billion market cap. No, it's Bitcoin, so it's worth $4 million. It's Bitcoin, so it's worth $800. It's Bitcoin because it's worth $2 million. What difference does it make? And if they can make money off the volatility, why make that illegal? No way. It's the biggest gift ever. Because they're broken. If you don't hold it, you don't own it. Yep. Joshua, SEC or henchmen, they get a piece of the action. SEC, more about starting Merck law firms when you get out and doing class action. That's where the money is for SEC henchmen. Well, the lawyers predominate the SEC, and a lot of people that work in law firms and at the SEC, they go back and forth. It's kind of like with Goldman Sachs and the Treasury Department. They're back and forth. So, but again, Perkins Coie is a law firm, and they gave some testimony at a recent congressional hearing on Bitcoin. And they're the firm that's, their establishment. They're the ones involved with the Steele dossier and the Clinton campaign. And what the letter they wrote to give to the committee, the congressional committee about Bitcoin, is all about how it needs to be regulated. And guess what that means? Work for Perkins Coie. They can bring ICOs to market. They can write up the registration statements. They can get the fees. There's no money in it for Perkins Coie if they ban it. What are they going to do? Represent criminal defendants? That's not as lucrative. The thing about when you regulate with IPOs, ICOs, it's steady work. You get a pipeline. 12 IPOs this month, 13 next month, 15, and the lawyers can see the millions coming in. All right, HZilla. BTC like Wall Street, no productive value-adding work product. Well, we'll leave that for another time on the values of Bitcoin. I want to thank you very much for tuning in today. And tonight, I will not live broadcast, but I am going to interview Wealth Watchman. He was on a couple of weeks ago, or maybe over a month ago. We were talking about India in silver. We'll probably pick up on that discussion and a few more topics. That podcast will be probably available tomorrow, but then we'll be back again tomorrow night at 8 o'clock Eastern Standard Time. I want to thank everyone for joining me today, and thank you very much.